Hello and welcome to this video on the topic of top 3 stocks to buy. If you're new to investing or looking to diversify your portfolio, then you're in the right place. In this video, we'll be discussing the 5 stocks that we believe have great potential for growth and could be solid investments for the long term. We've conducted extensive research and analysis to bring you our top picks, and we'll be sharing our insights and reasoning behind each selection. We'll also be discussing the current market conditions and trends that make these stocks particularly attractive. Whether you're a seasoned investor or just starting out, we hope you find this video informative and helpful. Remember, investing always carries risks, and it's important to do your own research and consult with a financial advisor before making any investment decision. So, without further ado, let's dive into the top 3 stocks to buy. 1. Phoenix Mills. Here are some topics related to buying stock of Phoenix Mills. Overview of Phoenix Mills. Before investing in any stock, it's important to understand the company and its business model. Phoenix Mills is a real estate company that owns and operates shopping malls, commercial spaces, and residential properties in India. It's important to learn about the company's financial performance, revenue streams, management team, and growth prospect. Analysis of the real estate market. Investing in real estate companies like Phoenix Mills requires an understanding of the real estate market in India. You should look into factors such as demand and supply of commercial and residential properties, pricing trends, and regulatory policies that affect the industry policies that affect the industry. This will help you evaluate the growth potential of Phoenix Mills and its competitors. Stock valuation. Once you have analyzed the company and the market, you should evaluate the current valuation of Phoenix Mills stock. This includes looking at the company's price to earnings ratio price, to earnings ratio price, to book ratio, and other valuation metrics. You should also compare the stock's current price to its historical trends and to its peers in the industry. Risk assessment. Investing in stocks always involves risk, and investing in real estate companies comes with its own set of risks. You should assess the risks associated with investing in Phoenix Mills, including market risk, regulatory risk, and company-specific risks such as debt levels and management quality. Long-term growth prospects. Finally, you should consider the long-term growth prospects of Phoenix Mills. This includes evaluating the company's expansion plans, its ability to generate revenue and profits in the future, and its competitive position in the real estate market. It's important to have a long-term view of the company's growth potential rather than focusing on short-term fluctuations in the stock price. 2. Macrotech Developers stock. Macrotech Developers Limited, formerly known as Lodder Developers Limited, is a leading real estate developer in India. If you're interested in buying stock of Macrotech Developers, here are some topics you may want to consider. The company overview. Macrotech Developers is a Mumbai-based real estate developer that primarily focuses on residential and commercial properties. It has a presence in major cities across India and has completed over 91 projects as of 2021. So, financial performance. As an investor, you may want to evaluate the company's financial performance over the past few years. You can look at its revenue growth, net income, operating margin, debt, to equity ratio, and other financial metrics to determine the company's financial health. Market trends. You may also want to keep an eye on the real estate market trends in India, including changes in demand for residential and commercial properties, government policies, and interest rates. These factors can impact the company's revenue and profitability. Competition. Another important factor to consider is the company's competition. Macrotech Developers faces competition from other real estate developers in India, such as DLF, Oberoi Realty, and Godrej Property. Management team. The management team of a company plays a crucial role in its success. As an investor, you may want to evaluate the experience and track record of the company's top executives, including the CEO, KFO, and CO. Risks. All investments come with risks, and buying stock of Macrotech Developers is no exception. You should consider risks such as changes in government policies, economic downturns, and industry-specific risks such as delays in project approvals and construction. The valuation. Finally, you may want to evaluate the company's valuation to determine if it's a good investment opportunity. You can look at the company's price to book a earnings ratio, price to book ratio, and other valuation metrics to determine if the stock is undervalued or overvalued. Overall, investing in the stock of Macrotech developers can be a good opportunity for those who believe in the growth potential of the Indian real estate industry. However, it's important to do your research and consider all the factors mentioned above before making any investment decisions. 3. Tech Mahindra stock. Company overview. Tech Mahindra is a leading global technology and services provider that offers innovative solutions to clients across various industries. The company specializes in digital transformation, consulting, and business process outsourcing. 2. Financial performance. When considering buying stock in Tech Mahindra, it's important to look at the company's financial performance. This includes revenue growth, profit margins, and earnings per share. You can also look at the company's balance sheet and cash flow statements to assess its financial health. Industry trends. The technology industry is constantly evolving, and it's important to stay up to date on the latest trends and innovations. Look at how Tech Mahindra is adapting to these trends and positioning itself for future growth. The competitive landscape. Tech Mahindra faces competition from other global technology and services providers. Analyzing the company's competitive position and its ability to differentiate itself from competitors can help you determine whether or not to invest in the stock. Management team. The quality of a company's management team can have a significant impact on its performance. Evaluate Tech Mahindra's management team, their experience, and their track record to see if they are capable of driving the company's success. Risks and challenges. No investment is without risk, and it's important to evaluate the risks and challenges that Tech Mahindra may face. This includes factors such as regulatory changes, cybersecurity threats, and global economic uncertainty. Valuation. Finally, it's important to consider the stock's valuation. This includes its price to earnings ratio, price to book ratio, and other metrics. You can compare the stock's valuation to other companies in the same industry to see if it is undervalued or overvalued. Thank you for watching. I hope you found this video informative and enjoyable. If you did, please consider subscribing to my channel and leaving a like or comment. I appreciate your support and look forward to bringing you more content in the future. Until next time, take care and stay curious.